Hello everyone, and thank you for taking the time to review the real estate market analysis for Morgan Hill, California for June of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Silicon Valley, putting together this report for you for this month. Now, if you'd like to get in contact with me, there's a number of ways. If you'd like to go to my website, you can find all of my other podcasts. You can also look at my articles on real estate and also view my monthly videos on the marketplace, including this one at www.soldbyrobert.com. If you'd like to get in touch with me via email, just send those to robert@soldbyrobert.com. If you'd prefer to give me a phone call, just dial 408-852-0525. And if you prefer to chat online using AOL Instant Messenger, Google Talk, or Yahoo IM, just use the screen name The Rebel Broker. And if you're a Skype user, just use the screen name Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in real estate in the Silicon Valley area, please feel free to get in touch. I'll be happy to help you any way I can. And finally, if you're interested in real estate anywhere in the United States, I can go through the process of finding the perfect agent for you. Just get in touch with me. Let me know what kind of real estate business you're interested in getting into, whether it's buying, selling, or investing, and I'll find the perfect agent for your needs. All right, now let's go ahead and take a look at the supply and demand numbers over the past years for June of 2009. Now, as we always do, we will start with the inventory numbers. And inventory, the numbers are heading in a good direction. You can see historically that the market we've all been going through is clearly represented. We peaked out in 2008 as far as the month of June is concerned, as far as inventory goes. And from last year, we are down 33.43% in inventory, which is excellent news. That is 110 fewer homes on the market in Morgan Hill in June of 2009 than we had in June of 2008. So that's excellent news. That gives us a grand total of 219 homes currently on the market. So that's great news. Now, as far as listings, the number of homes that have been listed in the month of June when compared to the same time period in previous years, we have a decrease of 22.22%. That's 16 fewer homes listed in the month of June in the month of in 2009 than in the month of June in 2008. So that's great news. That gives us a grand total of 56 homes added to the market in the month of June. Now, as far as solds are concerned, that's actually heading in the right direction as well for Morgan Hill. You can see that we sort of bottomed out there in 2007, started a little bit of a recovery in 2008, but really saw a lot more growth in 2009 as far as sales are concerned. Now, that made up we had an increase of 44.12% in Morgan Hill in sales. That is 15 more homes sold in June of 2009 than in June of 2008. And that's a grand total of 49 homes sold in June of 2009. So that's great for the marketplace. Now, as you all know, if you've listened to my analysis before, you know that I like to do a comparison between the number of homes that have sold and the total inventory to give us two ways of looking at the current market. Now, one is months of inventory, and that basically just implies that if the numbers froze where they are now, how many months of inventory would we have on stock? And we stand at 4.47 right now, so we have about 4.5 months worth of inventory on hand if all the numbers froze where they are, and we just continue to sell the same number of homes in the coming months as we did this month. And that's excellent. When we look at that compared to previous months, we can see that we're improving. Last month, that was at 6.3, so we've had a really big increase in that number for this month. If we compare that to the county stood at 3.45 in June of 2009, and that's an excellent number. That's a healthy, normal market kind of number for this ratio. Now, another way of thinking about this is as a competition number. If you're a seller trying to get your home sold, how many homes are you competing against for every one that sells? Well, for every home that sells in Morgan Hill, there's about 4.5 homes on the market. So it's still excuse me, it's still a competitive market out there for sellers, but it's not nearly as bad as it's been in previous months. Now, we'll see if this is a trend or not. To be honest, it's probably not a long-term trend of this number staying low. If there's any time of the year when you would expect this number to be lower, it tends to be in those summer months when homes are selling at their peak. A more realistic number is probably a little higher, probably a little bit above 5. if you were to average it out over the course of a quarter or a year or something like that. But still, remember, this is normalized for June. This is just the month of June. So we are definitely seeing performance that for this time of year, given the type of sales we see this time of year, we're doing exceptionally well. Excuse me. All right, now let's go ahead and jump into the same data, but now we're looking back straight over months now. So there's seasonal influences we're going to have to worry about, but we'll talk through those here. Now the first thing we're going to look at again is inventory. You can see that inventory, according to that, you can see how the averaging bar there that sort of swoops down. That shows that we've definitely seen a decrease in inventory, and it's been a pretty steady decrease. We've had a couple of months where things blipped a little bit, say back in October of 08. But really, since April and May of 2008, we've seen a relative decline. Now remember, that dip that you're seeing towards the right of this particular graph is the winter months. So you normally tend to see excuse me, you tend to see inventory drop during that time of year as people take their homes off the market for the holiday seasons. And then you naturally see an increase once you get into January and February and start heading into the normal part of the year. Now, is there anything we can take from this that'll inform us as to where we're going on these numbers? Well, if you look to last year in June, you can see that inventories were decreasing from February all the way to June. We almost followed that same trend last year. February, we actually saw an increase between February and March of last year. But we've seen a really steady, clear decline. Last year, you almost hesitate to call it a clear decline. It really looks just sort of flat to me. So we're actually seeing a difference this year than last year. Just a really good, steady decline in inventory, and that's really good news. Now, inventory was down 3.95% from May of 2009. That's 9 fewer homes in inventory this month in June than last month. So that's good news as well. Now, let's take a look at how many homes were listed. You can see this is also on the decline, a little bit less dramatically, but still on the decline. And the number of homes listed is down 12.5% from May. And that's 8 fewer homes listed and put onto the marketplace. So it's not a dramatic drop, but at least it's a drop. It's in the right direction, or at least in the right ballpark, to indicate to us that we're not seeing bad things starting to crop up again. Is there anything we can really get from this as far as looking back historically? You know, really, frankly, no. So much of this just has to do with the psychology of the moment. Now, we usually see an increase in listings right after the winter time and during the summer months, because that's when folks want to get their homes listed. That the natural time to want to move or move if you need to is during those summer months, particularly for families with kids in schools. And it's easier to move in the summer months than the winter months because no one wants their boxes to get rained on. So normally people pick the months leading up to summer and summer as the times to sell their homes. So normally you see a little boost in listings then. And of course you do see that this year. You see that in January we got a boost in listings between November and December's decline, and then comparing that to January. Now the listings, as I said, were down 12.5%. Let's go ahead and take a look at the solds data. Again, a pretty clear trend here. Sales are heading up at a pretty good clip. We've had a pretty good increase from last month. Actually, sales are up 36.11%. That's 13 more homes sold in June of 2009 than May of 2009. And you can see a pretty dramatic increase just since January. Now, what if we look back to last year, you can see we had a similar increase last year in June and July. Those are seasonal type boosts. We usually see June as the first month when sales really start to increase. But we had already started from such an elevated position this year than last year that we've really gotten a lot of bang for the buck for the number of homes that are selling in Morgan Hill. So that's all really good news. That's 13 more homes sold in June than in May. So that's a pretty good margin there to say, yeah, we're definitely seeing not only the market recovering a little bit here just in general because of the higher numbers of solds at this time, but also we're able to see that the season that we expect has arrived. So we're actually getting a summer season this year, which is nice because we really, in 2007 it was very weak, in 2008 it was also extremely weak. So it's good to see it kind of coming back this year. All right, now let's go ahead and take a look at the short sales and foreclosure data. We'll go ahead and start off with last month's information, and you can see that last month 50% of the homes that sold, 56% of the homes that sold were conventional. That means they weren't short sales, they weren't foreclosures. let's see, short sales made up 17% of the homes that sold last month. 28% were foreclosures. This month we're seeing them shift a little bit. We had seen a trend where we were getting more conventional properties selling, and that trend switched this month back to being a little bit more weighted towards short sales and foreclosures, only by 1%. So just under half of the homes that are selling are being sold conventionally. Frankly, I would have liked to have seen a little bit more of a gain on the conventional sales, just from a market health standpoint, because clearly the indicator here is that a lot of the boost in sales we're seeing are because people are taking advantage of the foreclosures that are out there. But remember, we're also at the end of a cycle where more foreclosures are on the market because there was that moratorium period where the government was really asking banks to sort of extend the foreclosure period. A lot of that's ending now, so we're seeing more foreclosures come on the market. And that's reflected here in this data, frankly, where they make up more of the properties that are out there. Now you see short sales have dropped by 1%. I don't know if I'd put a whole lot of stock in that, but I know anecdotally short sales are happening a little bit less. Things are moving into foreclosure. What we're seeing is a lot of folks who got their mortgages readjusted, and the readjustment folks, there's a probationary period of time on a lot of those folks who got the preferential interest rates and lower payments, and we're seeing an exceptionally high rate of redefault on those, and that I think also plays into this foreclosure number. Somewhere between 70 and 80% of the folks who get these amazing rates and 1/3 of their income adjusted mortgages are not able to make the probationary period is only 3 months, and we're finding that folks aren't even making the payments on time in those first 3 months. So a lot of these folks are redefaulting. Short sales, I think short sales becoming less and less of an option. A lot of these things, I think that big wave of homes that went through the short sale process have kind of come and gone, and a lot of them are now moving into the foreclosure area. So that's unfortunate for some folks, but that's how the market's sort of breaking up. All right, now let's go ahead and take a look at home prices in past years. This is, again, just the month of June, going back to 1999. And you can see that we've really taken the big hit here. We saw last year prices went up a little bit compared to previous years in the month of June. Now, I went back and looked at this, and that's really sort of a false number. We had so few sales last year in June that what we had were a couple of homes at the higher end that sold. So I wouldn't call that a true average. What I would say is that the real way to consider this historically is to look at that 2008 number and realize that if we re-examined it and understood that really just one sale sort of kicked things way up above the average, you'd see that should fall really a little bit further below. And we'll kind of see that a little bit here in the next slide, or not the next slide, but the next graph, which is the median price. Now, the average home price is down 31.59% from last year. That's a $283,742 drop between 2008 and 2009. And the average price in 2009 in June was $614,487. Now, let's go ahead and bring in the median price. Now you can see the median price is actually down from last year if you compare 2008 to 2007. That should be a pretty good indicator to you. Now you can also see in 2009 we have a similar phenomenon. So what does that tell us? That tells us that more homes were sold below the average price, and the average price is really sort of artificially high because of just one or two higher priced homes. The median stood at $545,000. It was down 32.51% from last year. That's a $262,500 drop in that amount from the same time last year. And so the highest priced home that sold in Morgan Hill was at 1645 Cochran Road. It sold for $1,295,000. Its original list, according to the listing, was $1,595,000. But a little bit of MLS magic has happened there. It really was put on the market at $1,895,000. And this is one of those things that really frustrates me about the way our data gets reported. Oftentimes when a home gets relisted, it'll lose its connection to its old list price, and that's what happened in the case of this property. It originally started at just under $2 million and went just under $2 million, and it ultimately sold for just over $2 million, or over $1 million. So it had a $600,000 drop overall in price. But I do have to tell you, I've seen that property. That was a beautiful home, so that the price of 1.295 is actually a really good price for that property. It was on the market for 263 days. Now, our lowest price single-family residential home was 80 Wright Avenue, and that sold for $205,000. That was a bank-owned property. It listed originally, according to the listing again, for $204,900. Again, that is one of those things where the way relisting is handled, it lost its connection to its original asking price. Its original asking price was $367,900, so it sold for a whole lot less than its original asking price, and it was on the market for 336 days. Now, this home, just to sort of calibrate you to where the prices have gone, in 2007, this home sold. Now, this is a good chart to be looking at this point because we weren't even at our peak prices in 2007. But in 2007, this home sold for $550,000. So it ended up selling for almost a third of what it originally sold for. Now, the price per square foot we're seeing this month in June of 2009 is $269.87. That is down from $277.30 from last month. And let's see, home prices just over past months now. Let's take a look at that and see what kind of future telling skills we can get from this. Now, you can see again, home prices on average are down. And I think this trend is pretty clear. Things have sort of flattened out a little bit in recent months, but frankly, I wouldn't call it a trend yet. I'd say we may see continuing dropping in average price, particularly as we sell off the foreclosures that are currently on the market. As you can see, the median was actually up in April. That's kind of an interesting change there. But again, the homes that are selling tend to be weighted down towards the lower end. We look at back in January where we had a couple of homes that were at the high end on price. In fact, I think a home I closed in January contributed to that being a little bit too high. But the median is way down, indicating that the average number of that there are more homes at the low end of this price than the high end. So that's sort of what the median's telling you there. Now, again, the average home price was $614,487. The price change between May and June was an increase of 10.2%. That's a $56,869 increase. Median price change was up 8.13%. That's a $41,000 increase, and the total homes sold was 49. Now let's go ahead and take a look at how many days it took to get homes sold. These are some interesting numbers. The trend here is going to be pretty hard to mistake. Clearly, we have seen a dramatic increase in how long it takes to get a home sold. It's been sort of having a steady rise ever since 2004, at least for the month of June. Now here in 2009, this number is a little artificially high. It's not pushed way up. We've had almost 50 homes sell in this month, so we've got enough numbers there to sort of minimize the effect of those ones that are just really out there. But we did have one home on the market that took 694 days to sell, and that's clearly going to skew the numbers up a bit. So this number's probably hovering. This gives the impression of just a continuing dramatic increase in days on the market, when in reality, this number, if we were to eliminate that topmost number, would probably be a little closer to 100, probably about 110. It would be you'd see sort of a trend of flattening of this number. So take that for what it's worth. As far as calibrating sellers to how long it's going to take you to get your home sold, I think this would actually be your absolute worst case scenario. Would be 137 days. I think if you've got the right agent and you're aggressively getting the house out there and marketing it and showing it to folks, and you've priced it correctly for the market, your worst case is actually more like about 100 days, 110 days. Now, this is the amount of change we saw between 2008 and 2009 was a 37% increase, and that's 37 more days to get a home sold. The lowest days on market in June of 2009 was 0. We actually had 2 properties that sold in 0 days. That basically means they sold before they were put onto the multiple listing service, and then they were added to the multiple listing service so that they could just be included in the sold numbers. And as I mentioned before, the longest days on market was 694. The next highest was 453. So those two were the 2 craziest numbers that we saw as far as days on market. Now, I like to calibrate you to sort of how this breaks up. So, as I said, 2 homes sold in 0 days, 3 homes sold in the first week, 9 homes sold in 8 to 30 days, 5 homes sold in 31 to 60 days, 5 homes sold in 61 to 90 days, 10 homes sold in 91 to 180 days, and 15 homes sold in 180 days or more. 28% of those homes sold in less than 30 days. So again, expectations can be pretty good for getting your home in escrow in the first 30 to 60 days if you're really paying attention to the market. That means not just looking at your market analysis as far as other homes that have sold, but also understanding your competition. Remember, competition really is the big player in this. Put yourself in the mindset of a buyer out there, and they're basically looking at houses and thinking, well, I can get this for this amount or this for this amount, and you need to be in the same sort of mindset. Now, a lot of agents sort of gloss over that. They'll look at other properties on the market as far as a number is concerned, but they really don't go in there and pay attention to the amenities and what the perception of a buyer is. And that's really key in picking your sales price. So make sure you're doing that, really drill down, and if you're not getting any action at all on your property in the first couple of weeks, you need to have a conversation with your agent and find out why. Okay, now let's go ahead and take a look at days to sell in past months. Are there any trends that we can spot here? You know, this days to sell number, particularly for smaller communities like Morgan Hill, is always a tough one to try and get any anticipation of where things are going to go. One reason why this is a tough number to track is because when we see an increase in sales, we often see an increase in days on market because we're selling off inventory that's been around for a while. This month is a perfect example where we had homes on the market for almost 700 days that finally sold and obviously pushed this number up. This is, I think, just a way to sort of calibrate yourself to expectations. I'll usually nudge these and figure them out. Like, for instance, back in March of 08, that one is one that's artificially high. Believe it or not, that August 08 one isn't really one that's artificially high. We really did just tend to see the numbers get up that high. The April of 09 is artificially high, and June of 09 is a little artificially high. So the number isn't really something we can get a lot from. The average person isn't really waiting 181 days in April or 137 days in June to get their home sold. But if we intelligently sort of analyze these, it can give us at least an idea of the trend of which way things are tending to go. And you can see that the trend line here indicates things are starting to go down a little bit in general. On a month-to-month basis, we have to adjust, but when you're looking at the year as a whole, you can see things are starting to trend down. And on a month-to-month comparison, we saw an increase of 31.73, 33 more days to get a home sold. But again, that's not something anyone should start working on their calendar and thinking, oh, I need to change my plan on how I'm selling my property based on this number. All right, now let's take a look at where all these properties were located. You can see they're pretty well spaced around. There's a cluster of homes that sold up there in the center top. That'd be property number 1546, number 3. Those are all homes up just off of Cochrane, and that's over by where the Target Center is. So it's good to see those properties moving. There were a lot of properties that simply weren't getting sold over in that area for a long time. We also you can see up by Anderson Lake, we've finally seen some property selling in Holiday Lake Estates. Jackson Oaks, we only had one home sell in Jackson Oaks. And that's amazing. There's a lot of really beautiful homes up in Jackson Oaks. I'm kind of surprised we're seeing such little action there. But then you can also see all down Dunn, going all the way to the 101 freeway. You can see a lot of properties, a lot of the communities that straddle Dunn have gotten sold. And even some properties way out off of Watsonville Road, where we've got some wineries and some horse properties and beautiful stuff out there. And then some of those communities just off of Tennant, which are right near the Centennial Center. Some of those properties have finally sold, and some of those have been on the market for a while. Overall, there's no real trend here that I think is important, although the area of downtown, right where you see number 5 and number 49 and all of those, I think those are interesting properties to look at. I know for investors, that's a good area to go, particularly with the 4th Street Promenade being worked on. So the dispersion there is nice. There's quite a. What's interesting is also in that area there's some interesting foreclosure properties. So those are areas people might want to spend a little time if they're interested in investing in Morgan Hill. Now let's go ahead and take a look at how to get in contact with me. I will spare you the long-winded reading of all of these since I already did that at the beginning of this particular presentation. I just put them back up here so you can easily jot them down if you want to get in touch. I do appreciate referrals. If you are interested in buying or selling real estate in Silicon Valley, please do get in touch with me. I'm always happy to help in any way I can. Thanks again for listening, and I will talk to you all next time.